In 18 hours, will this event cause the stock market to come down to some of our lower targets, or are we about to see new all-time highs? Now, as we come over and look at how the indices fared across the board today, the Dow was up 68 points, NASDAQ up 107 points, S&P 500 up 17 points, with the Russell 2000 being up 0.26. But notice when we come over and look at advancing issues versus declining, we had more issues declining on the day, 52.4% of issues to be exact. Then when we come over and look at the sectors across the board, only 2 sectors were in the red. Communication services, slightly in the red. Energy, by far outpacing everything else to the downside. Now, when we look at the fear and greed index today, we can see we're sitting right at 53. So it actually moved up 1 notch closer into greedy territory. But then let's not forget, we are only roughly 18 hours away before a potential government shutdown. Now, let's talk about why this could be so important, especially out here this week. And I basically talked about this in Sunday's video, but if the government does shut down, look at the news that just came out today. The BLS to suspend all operations in case of a government shutdown. Plans not to release economic data during a government shutdown. Now, how convenient is that for Friday? Because if we come over and look at how the labor market has been performing, the last couple labor reports, we've seen a decline in the numbers. If the numbers come out this week, is it going to show that jobs are once again shrinking? And if so, the chart that I'm going to share with you guys here in a moment shows that the labor market is running on fumes. Now, when you scroll right down here real quick, notice the gray areas on the chart. That's when the economy has been in a recession. The blue line is going to show the 6-month percentage change in core jobs. Now, when we come over here and look at this, notice every time we've dipped below the zero line, we've went into a recession right here back in the 70s. Once again, right here, here. Even during the dot-com bubble burst, 2008 financial crisis, then you see right here during the pandemic, we have a little bit of gray right there. And then look at where we're currently at. We're right there at the point to where if this breaks, things could get ugly in the market. Now, we talked about all the indices being in the green, but notice today the volatility index was also in the green. The VIX was up 5.56% on the day. If we look at the VIX on the daily chart, basically having an inside day. On Friday, we had a massive day on the way down. The VIX down a little more than 8% on the session. Today, we have an inside day. So whenever we have an inside day, we expect a breakout or breakdown from that day's range. So tomorrow, is it going to be more volatility in the market, anticipating that the government could be potentially about to shut down? We come over and look at the dollar index today. Dollar index was slightly down here just a bit, but then we come over and look at the precious metal gold. Look at gold on the move up. Gold closing up almost $50 on this session. Can anybody say new all-time high? Gold barely missed hitting that last level that we basically mapped out a few days back. We came down, we barely missed it, and now gold is right back up at new all-time highs. However, if we come over and look at the SPY real quick, the SPY today was not able to make a new all-time high. On the daily chart, the MACD indicator does have a bearish cross, but then as we dive down, let's say the 4-hour chart, this is where we can see this a little bit cleaner. We grab the Fibonacci retracement tool, measure swing high, all the way down here towards the swing low. Notice today we basically spiked above the 78.6, and then we came right back down. But now are we about to go back up again? Something we're talking about on the live stream this morning. And if you guys don't want to miss the next time I go live, make sure you subscribe. You have the bell notifications turned on for all. But if we can accept price above the 786, it's quite probable we are going to see the markets make another new all-time high. Now, on the 30-minute chart, we have a slight bearish cross of the MACD indicator, but one of the areas I want you guys to focus on is going to be this minus development area right up in here. And I'm going to go ahead and map this out. This is really going to come in anywhere from 663.79 to about 664.13. This could be a potential area where we get a reaction in the market. And what I mean by reaction, a potential push right back down. If you notice today, we barely missed filling the gap where the markets were able to gap up here this morning. You can see right here where the markets gapped up, we were unable to go ahead and fill that entire gap. Now we came very, very close, but as we all know, close is not good enough. Now, when we come over and look at the futures markets real quick, look at the 4-hour chart. I'm going to share with you guys this target real quick. But first, we need to map out the Fibonacci retracement level. Notice right at the 786, we had 1, 2, 3 wicks above it, and then price came right back down. Now, one of the areas we talked about in the live stream this morning was this minus development area right here. This could be a high probability area where the market comes into and tries to reject right back up and out. Now, like I said with a SPY, if we break above the 786 and we can hold above it, highly probable we'll make a run to new all-time highs. However, if we go ahead and we grab our Fibonacci extension tool, we measure right here, starting at the high right up here, we pull it all the way down to the low, and then we pull it right back up to here. This is going to give us an A to B equals CDD pattern target. That comes in right down here at 6602. Well, you know what else is right near 6602? Look left. We have that untested value area high from a few weeks back at 6605. So if indeed we do see the markets freaking out a little bit more tomorrow and volatility picking up, we could most certainly see stocks heading down towards this potential price target. Is the fact that Take Profit Trader is 40% off, zero activation fee. Take advantage of this offer. Use the link in the description box down below. Use code epitome at checkout. Now we come over and look at the daily profiles on the 30-minute chart. Notice today we barely missed hitting the point of control, and we also were unable to take out the P point, which came in at 6684.92. Now the P point, the why this is significant in the market is on a daily basis has roughly a 68 to 70% chance of being tested within the day. Well, today, since we didn't test it, tomorrow, wherever the new P point is going to be a very high probability target. Now, look at the profile from today. We have a double distribution area. I'm going to include this whole area right here as one distribution, and the second area right up in here. And right in the middle of that, we have what's called a minus development area. Just think about it as an area of inefficiency in the market. That comes in at 67.16.5. up here to about 67.18.75. Now, in this area, the first time we come up into it, we expect the market to either consolidate or reject back down. Now, if we are going to reject down, keep in mind, we still have that point of control below us that came in from Friday at 66.95. And right now we're closing right near the current point of control. Now, one of the ways, if you want to be more conservative, we're trying to target the 66.95. We can wait until value area low gets broken at 67.01 If it doesn't break it, then we can just simply disregard the target that we had below us. And if we can get above this distribution area here, I would then want to use the high volume node of the secondary distribution area as a target. 67.23, we breached that. We're coming back towards the highs of today. Then above that, you know what? We're probably going to make a run to new all-time highs. Now, if we look at the economic calendar for tomorrow, do we have any major economic news? Well, tomorrow we're going to get JOLTS data. Now, this week is going to be important. 1, we get JOLTS data. 2, we get the ADP non-farm employment change. 3, we're going to get the weekly unemployment numbers. And then Friday, maybe if the government's not shut down, we're going to get the non-farm employment numbers. Now, if we continue to see a weakening of the market, well, you know what? We're probably going to see the indices start to come back here just a bit. Now, let me go ahead and clear off some of these drawings that we had mapped out today on the live stream. And I want you guys to focus. Notice as the NASDAQ was pushing up, we did not make a new all-time high. However, we did drastically violate the 78.6. Notice as price pushed up, we've seen the presence of sellers pushing the market back down, but then look right below us. We have a large gap that potentially could be coming back to be filled as early as tomorrow. Now, if we were to pull a Fibonacci retracement from that high down towards the low, you can see we almost made it right here towards the all-time high. I'm really surprised today we didn't go ahead and punch all the way up through it. Now, the MACD indicator looks like it's just about to cross to the downside on the daily chart, and on the 4-hour chart, here's that large gaping gap left behind from today, which also correlates kind of with a high volume node on the profile at 595.69. MACD indicator is still bearish at this point in time. Now on the 30-minute chart, you can also see we have a gap below us and a minus development area well above us. Now I'm going to go ahead and map this out, zone it out for us real quick. 600.12 up here to about 600.69. In the event we see the markets up and around this area tomorrow, remember the rule, the first time into it, quite often we're going to reject back down or consolidate in this area. Now tomorrow, if we do see weakness in the market, I think it's highly probable we come back and fill the gap that was left behind from today. But I got to warn you, since Trump's going to be meeting with some of the leaders out there tonight, we could see some bullish news come out from that. So watch out for potential volatility in the Asia session tonight. Now, when we come over and look at the NASDAQ futures real quick, unlike the S&P 500, since we go ahead and we grab our Fibonacci retracement, we've already broken above the 786. I am not going to be looking for an A to B equals CDD structure on the way down. For me, we retraced a little bit too high for that. However, that doesn't mean we can't still have some high probability targets off some of the high volume profile nodes that formed out here last week. Notice we still have this area right below us, this minus development area, about 24,726. High probability that we still come back and test it. First time into it, expect the market to consolidate or potentially reject up and out. Now, we also want to grab our Fibonacci retracement of this last leg up. Now, the 38% retracement would be considered a minor retracement, and that kind of correlates with the minus development area. However, quite often we're going to retrace between the 50 and 61.8 fib levels, which right below the 61.8 comes the point of control from last week. And right around the 50, we have that high volume node right here, about 24,726. Now, when we come over, look at the daily profiles real quick. Notice we have a minus development area above us, and the profile on the very bottom down here is a little bit thin. Also, friendly reminder, Friday we closed above value area high. The rule behind that is either today or Tuesday, we're going to come back and test that level. And as the market's drifting lower, if the news that comes out tonight, if it doesn't seem like a deal will be in reach to avoid a government shutdown, we could quickly see the market flush down towards that value area high. Now, if you look at value area low right here, that comes in at about 24,804.75. If we break below that, I then want to turn my attentions towards that value area high. If we're trading above value area low, I don't really want to focus on that level. And ideally, if you're looking to be bullish to market, I'd prefer to see the market move real quick below value area low, then come up. We can target the point of control. We start breaking above value area high. I really want to target this minus development area at about 24,909. And then right up here towards this distribution area of the profile, anywhere from 24,951 to about 24,924. Anything above today's high, you guys guessed it, we're probably going to make a run to new all-time highs. Now, if you guys trade copy the markets, you need to check out this trade video, as it has completely eliminated this one flaw that most trade copiers have.